Hello everyone, once again my name is Michael Robillard and this is the Evolving Trader. And we are coming to you now with a basic and effective technical analysis setup part 2. This will be a series designed to give you the knowledge and the tools that you need to be able to be an effective trader. Having a good technical analysis setup is a key component to being successful in the stock market for various reasons. Now, before we go any further, please hit the like button down at the bottom, subscribe, and hit the alert button to be able to be notified at any time when we come out with a new video. We're just getting started, and we will be coming out with tons of information to help you become a better trader in the stock market. Now let's go on over to our disclaimer. Please, if you need to, pause, read it all out. Please note that we are not licensed financial advisors. This video series is for educational purposes only. We are not advising you to buy or sell anything. Any buying and selling that is done throughout this series is purely for educational purposes only. All right, now that we got all the business stuff out of the way, let's go ahead and get started. Last week we went over candlesticks and the anatomy of a candlestick, what different candlestick shapes represent, what wicks are, and so forth and so on. Today we're gonna bounce a little bit further off of that information, and we're gonna talk about what I look at on a regular basis, which are reversal patterns. Now, there are tons of patterns that you can study and look at to become a better day trader. These are patterns. I picked out 3 upward reversal patterns and 3 downward reversal patterns that I commonly see and make decisions based off of. Okay, like I said, there are tons out there, way more than what I'm about to show you, but it's good for you to have a good foundation, and I don't want to feed you with so much information that you are too overwhelmed. So I'm just going to stick with 3 basic upward reversal patterns, 3 basic reversal downward patterns that I look at on a day-to-day basis when I'm making decisions as a trader. All right, so first we're going to look at 3 common upward reversal patterns that I see. The very first one is called a hammer. Now keep in mind, these first 3 patterns are for stocks that are on their way down. As you can see here, it's on a bearish downward trend, and then all of a sudden you get this indicator right here. This is called a hammer, as you can see right there, because it looks like a shape of a hammer. A couple of important things to look at. Number one, it's red, this one green here don't matter, red, and then you get this green pattern with a long wick at the bottom. Sometimes it might have a little point up at the top. This is not an exact science. All of them are not going to look this clean. They're not going to look this perfect. And you will see by the end of this part 2 series what I'm talking about as we look at an actual chart. But this is pretty much what you're going to look for, is that long wick at the bottom. Now, as a momentum trader, as I said in the previous series, I don't like to take risks. I am not a risk taker. I like to see confirmation of what I'm getting myself into. So if this was an actual stock and we see this pattern and then we see this hammer down at the bottom, I normally would wait for the 3rd candlestick here. Some people could probably disagree with me, and that's fine. I know plenty of people that would disagree with me and would say that this is the perfect time to jump in as soon as you see this. However, as I've said before, there is no perfect setup in the stock market. Just because you see this hammer at the bottom of a red, heading down trend, does not always mean that it has worked. But what it does tell you is that most commonly, most of the time, when you see this, it will go up. Right? Any technique, any type of analysis that you learn, get comfortable with knowing that it does not work 100%. None of them do. But most of the time when you see this, you're going to see this. No questions about it. Keep this in mind. This is called a hammer. All right, now we're going to move on to the next pattern. The next pattern is called an inverse hammer, which is a hammer once again, right? Once again going down, red, 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 red. And then we got this green hammer all of a sudden that appears with this long wick up at the top. Right? Looks like a hammer that's placed down on its head on the floor. Once again, I look for the 3 confirmation that it is going up. And then that's when I go in for the kill. All right? Reverse hammer, plain and simple. Now let's go to the third reverse upward pattern that you can see here. This is called 3 white soldiers. Some people call it 3 white knights. It's basically 3 patterns going back to back green. When you see 3 in a row, that's a good indication that the downward momentum has shifted to an upward swing. All right. So those are the 3 patterns I look for an upward trend. And the reason why I'm looking for these is because I'm waiting for the downward trend to reach its bottom, right? It's basically the same old adage that you've heard time and time again about the stock market and about trading and business in general. You want to buy low and sell high, right? But how do you know what the low part is to buy into? That's what these reversal patterns are showing you, right? So see stock going down, going down, going down, and the next thing you know, you see these 3 heading up. This is a good indication. Normally when I see these 3, I don't look for any other indication because that's my indication enough that it is on an upward trend, and then I go ahead and buy. All right? So now let's focus on the reverse. All right? So you're in a good trade. It's heading up. How do you know when to jump out? Well, there are also patterns to show you exactly when to jump out. And these are the downward reversal patterns that I see most commonly on a regular basis. Okay, the first one here is called a bearish engulfing. All right, so you're seeing the pattern going up, 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 up. And the next thing you know, you get a big red candlestick. A candlestick that engulfs the one previously, the green one previously above it. Right? This is the time to know that you're about to jump ship. Normally, when I see this, it's not a definite. Like I said, nothing is 100%. I would wait for looking at the next candlestick to say, okay, I'm about to jump ship. Right? So with this particular candle, I would definitely give it a time because sometimes it will reverse and keep going back up. Like even though it has this, it might come with an indecision candlestick right here, or maybe even an indecision one here, and then it bounces back up. So I always look for that second confirmation and I jump ship. Okay, this is one of the most common ones I see every day. The next downward reversal patterns that I see, I'm going to be honest with you, I don't look for any confirmation on these next 2. I just jump ship immediately because most of the time it will do exactly what it's warning you is going to do, which is go down. So, I've taken chances on them a couple of times and gotten burnt. Since then, I don't take chances anymore. When I see these patterns, I just jump ship immediately. The first one is called a hangman. Once again, it's a hammer, but it's red, right? Red with the long wick at the bottom. Stock is going good, and then next thing you know, you see red, and even you see this wick. This is pressure. This is saying, yes, the sellers came and they pushed it down. The buyers came back and got it up. However, the buyers were still overwhelmed by the sellers. Even though they didn't get it down to where they wanted it, the pressure is still there. So when I see this, I jump ship. Keep in mind that if the color is green, once again, pay attention to the color. If it's green, then that means most likely it will keep going up. But when it's red, that is the time to jump ship. That is the absolute time I jump ship, and I do so without hesitation each time. I don't wait for the confirmation. When I see this at the top, I'm out. Okay, the next one, just like this last one, called the shooting star. As you can see here, it's another hammer, right? The hammers are strong indicators of going up and going down. Once again, stock is going up, and you got this strong pressure for it to go up, but then the sellers overpowered the buyers, and the stock ends up being red. Once again, when I see this, as soon as the next one starts forming, I don't care where it's at, as soon as the next one starts forming, I'm selling. Or actually, I don't even wait for the next one to form. As soon as I see this coming to an end, I'm selling, because most likely it will go down. Not always, but most of the time. I think, yes, that was the last one. So now what I'm going to do is take you to an actual chart to see how these patterns work out in an actual chart. Okay? Here we are looking at Google. I believe I had already marked this one up here. Now, as I said, there's other patterns. This one actually is a pattern. I forgot the name of it. Excuse me. But this is an actual pattern that you can see here as a sign to go up. But we're only going to focus on the ones that we looked at. Look at this. This can be argued as a hammer. Kind of looks like a hammer. We can kind of sort of argue it. If the wick was a little bit longer, then I would say yes, it's a definite hammer. But look at what happens. You got these three right here, which is the three white knights, or the three horsemen, right? One each bigger than the next, right? Still going up. Still going up. And then what do you see here? What did I tell you? Hammer up at the top. Don't even bother. Inverse hammer. Or actually not inverse hammer. I'm sorry. Shooting star. Now also look at this. This is an engulfing of this one and this one, definitely dropping down. Now this is really a wick, right? It's really a wick formed in a cross, but the pressure going down and it's green is a good indication of up. So, I kind of marked that in there just so you can kind of see the constant pattern. Strong wick at the bottom, green candlestick, usually means that it's going to go up. These right here with the short wicks, top, bottom, hard to say because it's a big tug of war. Look at this engulfing. Remember what I told you? Nothing is 100%. Look at what happened with the next candlestick. It went right back. It went up. Oh, where were we? Here we are. Where were we? Is that where we were? I think we kind of got lost. All right. Oh, here we are. Yeah, so as you can see here, it went up, but then look, it didn't stay up. But now look at our three white knights heading up. Strong indication. Strong indication, even though this can be considered a doji because the body is really not big. Strong pressure at the bottom. Strong indicator that the stock is going to go down. And sure enough, it drops. It drops. Right? Now what was this? This is called an engulfing. Engulfing. Look at this. This pushed up a bit. Got this engulfing pattern right here. Overpowering this. And then the stock goes down. This, even though, once again, doji can be considered kind of a hammer. Got the pressure going down. And stock goes up. All right, so these are patterns. Once you get used to seeing these, it'll be like sleeping. Like You could do it in your sleep. You can see these patterns in your sleep after a while. Here's a hammer up at the top here. Put the pressure for it to go down. Very big downward here, but then you see this jumps up the next day. This is a 1 day candlestick pattern, by the way. All right, so we're looking at the ones that we talked about. Here's an engulfing one right here. Right, 3 white knights right here. So as you can see, these patterns, you see them all over the place. 3 white knights all the way up. Look at this engulfing. Brings it down. Check out that. Morning star. Stock going up. Morning star again. Stock going up. As you can see. And then here is a shooting. This can be considered a shooting star because the wick up at the top is long enough. Body down at the bottom. Shooting star goes down. And there you go, folks. This is how you can take a look at a stock, look at a chart, and know for sure when to jump in, or like I said, not necessarily for sure. There's tons of patterns out there. I didn't even cover, I only covered a small fraction of the patterns. Like I said before, I didn't want to overwhelm you with so much information. It's always good to start with just a few. I definitely encourage you to go to YouTube, look at videos. If you want, we have a couple of information on our Facebook page, which is the name of the group is the same as this page right here, The Evolving Trader. Go there, join the group. You can look at our units section, and we have a couple of booklets on candlesticks and patterns, which will give you even more pattern ideas that to look for and keep an eye out. Once you do this for a while, it becomes second nature. And that's about it. That's all we're going to cover with this part 2. Part 3, we're going to look more into entries and exit points. Kind of the same as what we covered today, but there are other things that we can look at to know when is a good time to go into a stock, when is a good time to come out of a stock. Once again, we haven't gone into the full technical analysis setup yet, but these are things that are important to know before we get into those, because you're gonna use a series of things that will help you to make educated decisions when you are looking at a stock and deciding whether or not to go in, and once you're in, to decide when to come out. Once again, my name is Michael Robillard. This is the Evolving Trader. Stay tuned. We are going to come out with part 3 on Sunday. And that's about it, folks. I'm going to go ahead and let you go and enjoy the rest of your day, evening. I am out.